Okay. Good afternoon. Good afternoon. Okay, I want us to start our session today. I am Mr. Kiarie. I lecture Advanced Financial Reporting. And today, I want to take you through a topic in Advanced Financial Reporting called a company reconstruction stroke reorganization. Company reconstruction stroke reorganization. So just put down in your notebook, the topic is company reconstruction stroke reorganization. If you are ready, we'll start. You write below that. Company reconstruction stroke reorganization. Company reconstruction stroke reorganization involves rearrangement of the company's capital structure, rearrangement of the company's capital structure and operations, of the company's capital structure and operations, in order to match the current status of the company, and resume to profitability. Full stop. There are two types of company reconstruction. Namely, number one, internal reconstruction, and number two, external reconstruction. In our today's session, I'll start by taking you through internal reconstruction. And therefore, kindly put down in your notebook internal reconstruction, a subtopic, internal reconstruction. Put down internal reconstruction. Then you write it arises when a company carries out a capital reconstruction scheme. Within itself in order to match its current operations. And eliminate any accumulated losses. In this case, you continue, The following are the relevant entries. The following are the relevant entries to record the scheme. To record the scheme. To record the scheme. The first one, number one. The first one, number one. With number one, with decrease in the value of ordinary stroke preference share capital, ordinary stroke preference share capital. You put a full colon, then below that, debit capital reduction account. Capital reduction account. You debit ordinary share capital account, debit ordinary stroke preference share capital, ordinary stroke preference share capital. Then you credit capital reduction account. You debit ordinary stroke preference share capital. Then you credit capital reduction account. This capital reduction account is also known as capital reconstruction account. You can also refer to it as the capital reconstruction account. Entry number two. With decrease in the value of assets, put a colon, full colon, debit capital reduction account, then you credit asset account. Debit capital reduction account, then you credit asset account. Number three, the screen will be back in a minute. So kindly be patient. Number three, with increase in the value of assets, debit asset account, below that you write debit asset account, credit capital reduction account, you credit capital reduction account, Number four, our fourth entry number four, to write off accumulated losses, put a colon, debit capital reduction account, credit profit and loss account, debit capital reduction account, you credit profit and loss account. Number five, To write off reserves, debit reserve account, credit capital reduction account, debit reserve account, credit capital reduction account, debit reserve account, credit capital reduction account. Number next, with issue, that is note number 6, with issue of new shares stroke debentures, with issue of new shares stroke debentures, debit cash stroke bank, debit cash stroke bank, credit share capital stroke debentures account, debit cash stroke bank, credit share capital stroke debentures account. Number next, I think it is number 7. Number 7 says, the screen will be back again shortly. Number 7, to record settlement of a liability, to record settlement of a liability, to record settlement of a liability through issue of shares, you put a colon below that, debit liability account, credit share capital account, debit liability account, credit share capital account. Then from there, we can proceed on to our past papers. Kindly get out your past papers. November 2015, the question has been shared in your chat option. November 2015, question number 2B. November 2015, question 2B. November 2015, November 2015, question 2B. Kindly let's get there. November 2015, question 2B. Tabu Limited. The question is about a company called Tabu Limited. I wish you are there. It reads, Tabu Limited is a private company. 3/4 of the issued share capital of the company are held by the directors and their members of their families. The company's draft statement of financial position as at 31st December 2014 was as follows. The SFP has been given. Some information has been given below that the bank loan and the overdrafts consist of 10% loan of 400 million carrying a fixed charge on the company's building and unsecured overdraft of 27 million. The demand for the company's products has fallen drastically in the recent years owing to the importation of high quality and cheaper alternative products from Southeast Asia. The development costs appearing in the SFP relate to a new product that has been perfected to a marketable stage and for which there is believed to be a strong demand. These costs have been properly capitalized in accordance with the provisions of IAS 38 intangible assets, and the company is in the urgent need of capital to meet the existing liabilities and the necessary new investments in plant and working capital. A scheme of reorganization has been drawn up for consideration by the shareholders and the creditors. The terms of this scheme are as follows. Number one, the shares of the 10%, the shares of shillings 10 each are to be written down to 2 shillings per share, and subsequently every 5 shares of 2 each is to be consolidated into one fully paid share of 10 each. Number 2, the existing shareholders are to subscribe for a right issue of 2 new shares of 10 each as per every share held after the proposed reduction and consolidation. Number 3, a major supplier agrees to exchange a debt of 180 million included in the payables for 18 million ordinary shares of 10 par value. Number 4, in full satisfaction of the 687 million owing to the bank agrees to accept an immediate payment of 87 million and to consolidate the balance of 600 million into a loan carrying interest at the rate of 13% per annum, payable in 5 equal annual installments commencing on 31st December 2016. The loan is to be secured by a fixed charge on the buildings and a floating charge on the company's remaining assets. Number 5, the credit balance on the share premium account and the accumulated losses and goodwill are considered valueless and therefore should be written off. Number 6, the assets listed below are to be restated as the following amounts. The amounts have been stated. Then the next statement. A group of dissatisfied shareholders plan to oppose the scheme because they feel they have borne an inordinate burden while the bank has lost nothing. Then from there, the company has received a cash offer of 1120 million for its non-current and current assets. Then you are required to prepare a revised statement of financial position of Tab Limited as at 1st January 2015 after conclusion of the proposed scheme of reorganization to earn yourself 10 marks. And then the second part, you give a report to the group of dissatisfied shareholders advising on whether they should accept or reject the scheme of reorganization to earn yourself another 4 marks. Now, let's proceed. Okay, in this question, you are required to prepare straight away the group statement of financial position. But in most questions of internal reconstruction, you are also required to prepare an account for a group or capital reduction account. And therefore, supposing that the examiner had required you to prepare the same in this question, we are going to start from there. We will start by preparing a capital reduction account or a capital reconstruction account in order to see how it should appear in case the examiner requires you to do that. Therefore, let's start with writing up a capital reduction account. So just write capital reduction account. capital reduction account. We'll start from the first note, that is note 1. We'll start right away from note 1. We'll start right away from note 1. Note 1 says, the shares of 10 each are to be written down to 2 per share. And subsequently, every 5 shares of 2 each consolidated into 1 fully paid share of 10. Now, in this particular case, if you check from our SFP, what is the value of our ordinary share capital? The total value of ordinary share capital. Let me have the response. Unmute yourself kindly. 800,000, correct. And what is the par value per share just across that value? 10. Therefore, what is the total number of ordinary shares outstanding? 80,000, correct. Therefore, if the reduction is being made for 80,000 from 10 shillings to 2 shillings, that means that the reduction per share is 8 shillings per share. Therefore, to get the capital reduction of our ordinary share capital, you multiply 80,000 times the reduction of 8. 80,000 times the reduction of 8. Ordinary share capital. Kindly let me have the answer. 80,000 times a reduction of 8 shillings per share. 640,000, correct. 640,000. Therefore, we debit our ordinary share capital account and we credit our capital reduction account. Number 2. Number 2 is about subscription of the ordinary shares. So just below that, you can just keep some 5 lines, 5 to 7 lines, and then you write down there, ordinary share capital account. Ordinary share capital account. Ordinary share capital account. Just keep some 5 to 7 lines, and then you write ordinary share capital account. You have said that the balance brought down for our ordinary share capital account is 800,000. 800,000. Now, in our second note, there is a right issue which will increase the value of the ordinary shares on issue. Now, the right issue is for 2 new shares for every share. Therefore, it is 2, so you write right issue. So, it is 2 shares for every outstanding times 80,000 times the price per share. This is 800,000. I can just move it here. 800,000 times the new price per share. After the capital reduction scheme, what is the price per share after the reduction scheme? So it is 2/1 times 80,000 shares times our new price. What is our new price, somebody? 2 shillings, correct. Multiply 2/1 times 80,000 times 2. $320,000, correct. 320,000. Now, after that, note 3. A major supplier agrees to exchange a debt of 180 million included in the payables for 18 million ordinary shares of 10 each. So somebody agrees to convert his debt into ordinary shares. Therefore, in this case, the share capital will increase by the value of the creditors. Therefore, you just write payables are being converted. And the value of payables being converted is 180 million. The figures have been priced at thousands, and therefore it is 180,000. Then, after that, you complete the double entry for this figure. The capital was reduced by 640,000, and therefore you write capital reduction. Capital reduction. The capital was reduced by a total of 640,000. So you indicate 640,000. 640,000. You indicate 640,000 on the debit side. Skip number 4. Meanwhile, let's skip number 4. I'll refer back to note 4. Then we refer to note 5. Let's refer to note 5. The credit balance in the share premium account and the accumulated losses and goodwill are considered worthless and should be written off. So, what is the value of our share premium? What is the value of our share premium? Somebody? 50,000. Now, we want to write off that share premium. A share premium is actually a reserve. It's a capital reserve. So, according to our notes, how do you write off a reserve? Somebody? Good. You debit the reserve account and then you credit capital reduction account. Therefore, in this case, you debit share premium account and credit the capital reduction account. We have said that the value of our share premium, is 50,000. 50,000. So the other entry goes to the debit side of the share premium account. Then we are also writing off in the same note the accumulated losses. The accumulated losses. Somebody to give me the treatment for writing off accumulated losses from the notes that we have just put down. Yes. Good. You debit the capital reduction account and you credit the profit and loss account. Our concern here is the capital reduction account, and therefore profit and loss account, the double entry gets there. What is the value of our accumulated losses from our SFP? Somebody? What is the value of our accumulated losses?
232,000.
Good. 232,000. It is under equity just after share premium. 232,000. 232,000. Good. We are also writing off goodwill. That means that the value of goodwill will be decreased to 0. Now, what is the value of our goodwill from our SFP? Somebody? 60,000, correct. Now, to write off the asset, that is decrease in value of an asset. What is the accounting treatment? Somebody? You debit capital reduction, good.
Credit the asset.
Good. So our concern is the capital reduction account. Therefore, in this case, the specific asset is goodwill. Goodwill, the value you have told me is 60,000. Good. Then from there, we refer to note 6. From there, we refer straight to our 6th note. The assets listed below are to be restated as the following amounts. Plant and machinery. It is to be restated to 125,000. What was the original value? From our SFP, somebody? Plant and 300. So how much is the reduction so that we can credit the asset and debit the capital reduction account? The asset is plant and machinery. Get for me the reduction from 326 to 125. 201,000, correct. Then after that we have inventories. The new value is 210. I can see from our SFP the original value was 426,000. Kindly compute for me the reduction of inventory. Kindly work out for me the reduction in the value of inventory. $216,000, correct? After that we have 216,000. After that we have receivables. The new value of receivables is 500,000. The new value is 500,000. And the original value was the original value for receivables was 531,000. What is the reduction? Somebody? 31,000, correct. 31,000. After that we have buildings. Our new value is 320. The original value was 270. In this case, somebody? 50,000. Increase or decrease? Increase. So we said where there is increase in the value of an asset, what are we supposed to do? Somebody? Good. In this case, our asset is buildings. What is our new value for build? What is the increase? Sorry, 50. 50,000, correct. Now the rest is about the issue of dissatisfied shareholders and the offer price. Just do away with that. We are going to deal with that later. So I want you to confirm for me whether our capital reduction account is duly balanced. Kindly confirm for me whether our capital account is duly balanced. Confirm for me whether our capital account is duly balanced. And if it is duly balanced, let me know the totals of each side. It is balanced by 740,000, correct. 740,000. If you have a question, you can kindly raise it at this point. Any question? If no question, we proceed on and prepare the group statement of financial position. Let's now prepare. Okay, get for me the balance carried down of our share capital before I forget. Work out for me our balance carried down. Work out for me our balance carried down for the ordinary share capital account. 660,000. 660,000. 660,000. Therefore, not unless you have any issue to raise, we proceed on to preparation of the SFP. I want to remove whatever is on the board. Now, the name of our company is Tab Limited. The name of our company is Tab Limited. So, you write Tab Limited. Tab Limited. Tab Limited. Statement of financial position. Statement of financial position. As at, we are preparing our SFP as at 1st January 2015. As at 1st January 2015. Our figures are priced into thousands, and we'll start with non-current assets. We'll start with non-current assets. We have development cost, which is an intangible asset. What is the value of our development cost? Somebody. What's the value? It is not changing. It remains constant. Don't mind. What is the value?
85,000.
85,000, correct. Then from there, we have goodwill has already been written off. We have buildings. What is our new value for buildings? New value. 320,000, correct. After that, we have plant and machinery. Our new value. Somebody? $125,000. Get for me our total current, non-current assets, sorry. $590,000. Good. Then we proceed on to current assets. We proceed on to current assets. Under current assets, I can see from my screen that Swari is having a question. Kindly unmute yourself and ask the question before I proceed. Swale, kindly unmute yourself and ask the question. Okay, you can maybe ask it later. Now, inventories. What is our new value? What is our new value?
10,000.
Good. 210,000. What about receivables, new value? 500,000. Good. Now, what about cash? I can see as far as cash is concerned, we had we made a payment. We had a bank loan and an overdraft of 87. Now refer back to note 4 that I had mentioned about. Note 4. Refer back to note 4. Kindly refer to note 4. In full satisfaction of the 687 million owing to the bank agrees to accept an immediate payment of 87 million. Therefore, we are making a payment of 87 million. That's a negative. But at the same time, we made a right issue, which is a positive. From the right issue, how much cash did we obtain from the right issue? How much cash did we obtain from the right issue? Refer back. $320,000. Good. So plus 320,000. So what is our new value of cash balance? We obtained 320,000 and we made a payment of 87. 87 is a minus, is a negative. 233,000. So what is the value of our total current assets? Yes? 943,000. What is the total value of our assets? Current plus non-current. 1473,000. Good. Now we get to equity and liabilities. Equity and liabilities. The figure for cash is not okay. Okay, I said that the 87,000 is a payment and therefore it is a negative. Good. Okay, equity and liabilities, I can see we have ordinary share capital. What is the value of our ordinary share capital? $660,000, correct. The balance carried down is 660,000. Then we have the share premium was written off. If you can remember, the share premium has already been written off. Therefore, you don't have share premium. The accumulated losses have already been written off. Therefore, you get straight away to non-current liabilities. Non-current liabilities. As far as non-current liabilities are concerned, I know we have a bank loan. Initially, bank loans and overdrafts together, what was the value? Bank loans and overdrafts, the original value was? It was 687,000. But we made a payment of how much? 87,000. Therefore, 687,000 minus 87,000. I believe you'll be left with 600,000. I believe you'll be left with 600,000. And therefore, since we don't have any other non-current liability, we proceed on to current liabilities. We proceed on to current liabilities. What do we have under current liabilities? I believe we have what? trade payables. Can you see the payables? What is the value? What is the value of payables? Yes? It is, the value of our payables is 393. But remember, one of the payables was converted into share capital. That was in note number 3. What was the value of the conversion from payables to share capital?
180,000.
So remove that. Remove the 180,000. Remove the 180,000 so that you are left with the net payables after the conversion. 213, correct. So kindly get for me our total equity and liabilities. Get for me the totals of our equity and liabilities. 1473,000, correct. And therefore, our SFP is duly balanced by 1473,000. If you have a question, raise it before we proceed.
I have a question. In note number 4.
Note number 4, yes.
It talks about the bank, the money to the bank, from there is a loan carrying interest at 13% per annum.
Yes.
So shouldn't that be considered in
Okay. That one will be considered in subsequent financial periods because the issue of the loan carrying interest at the rate of 13% per annum will start after the reconstruction scheme, and therefore our SFP, we are just preparing it immediately after the reconstruction scheme. Are you answered? Good. Any other question? Note number 8. Okay, note number 8, we are going to consider it in our second requirement of the question, Roman 2. Any other? Okay, if no other question, we can now solve the second part of the question. The second part of the question requires that you give a report to the group of dissatisfied shareholders advising on whether they should accept or reject the scheme of reorganization. You give a report to the dissatisfied shareholders and you advise them on whether to accept or reject the scheme of reorganization. I will refer you back to note number 8 as you had said earlier. Note 7 first, note 7 and 8. Note 7 says, I'm referring you back to note 7. A group of dissatisfied shareholders plan to oppose the scheme because they feel they have borne an inordinate burden, whereas the bank has lost nothing. They have borne an inordinate burden of reorganization, whereas the bank has lost nothing. And then the 8th note, the company has received a cash offer of 1120 million for its non-current assets and current assets. Now, how do you advise the group of dissatisfied shareholders? Now, so you just note below that a report to the group of dissatisfied shareholders. A report to the group of dissatisfied shareholders. A report to the group of dissatisfied shareholders. You're going to put it in a paragraph format. You put it in a paragraph form. The first paragraph. the first paragraph. The accumulated losses have already been written off. The accumulated losses have already been written off. And therefore, the company will be able to make profits. The company will be able to make profits and pay dividends as soon as new profits are made. Another paragraph. In case of liquidation, the ordinary shareholders would only be left. In case of liquidation, the ordinary shareholders would only be left with shillings 40 million. Into brackets, what is the value of our cash offer? Note 8. How much are we being offered? 1120, correct. And remember, 1120. And remember that we have outstanding liabilities of how much? Total outstanding liabilities. Both current, total current liabilities. Total current, originally from the SFP. From the SFP, is it 1080? Somebody has a question? Okay, that would mean that the company. Yes, which question? The value of that would be left to the ordinary shareholders would be 1120 minus 1080. Therefore, it would mean that the ordinary shareholders would only be left with 40 million, ignoring all the liquidation costs that might be involved. And therefore, compared to their current entitlement of 660 million, it is way below. Therefore, you write, in case of liquidation, the ordinary shareholders would only be left with shillings 40 million into brackets 1120 minus 1080, which is way below their current entitlement. Another paragraph. The ordinary shareholders, the ordinary shareholders are the primary owners of the company, When the company performs well, when the company performs well, they are the major beneficiaries. They are the major beneficiaries. They are the major beneficiaries. Comma. Similarly, when the company makes losses, they should be ready to bear the burden. They should be ready to bear the burden. Full stop. A concluding paragraph. Based on the above considerations, the dissatisfied shareholders should accept. The reorganization scheme. The screen will be back. The dissatisfied shareholders should accept the reorganization scheme. Any question? Any question before I conclude our class today? Any question before I conclude our class today? Now, I will conclude our class today by giving you an assignment from your past papers, of November 2016. Question number 3B. Okay, generally question 3. November 2016, question number 3. Make sure that you attempt that assignment. Make sure that you'll consider in that question you are required to prepare both the capital reduction and the SFP. And okay, I've already shown you how to prepare the SFP. Okay, so you'll consider that question. Before we proceed on tomorrow with what we call external reconstruction, because today we have considered internal reconstruction only. Tomorrow at 2, I'll be proceeding on with external reconstruction, and I'm made to understand by the moderator that today it was a free ride, and tomorrow you're supposed to put some efforts. So not unless you have a question, kindly let's stop at that. And any question before I proceed on? Before I terminate the class? Okay, if no question, let's proceed. Let's stop at that. You have a question? Raise it.
Yes. Okay, if we do the assignment.
Yes.
If we attempt the assignment.
Yes.
How will it be marked?
Okay, once you attempt the assignment, we are going to make arrangements and have the assignments done in the same way we have done just the normal question, the classwork. Okay, I wish you a nice weekend. Let's stop at that. Have a nice weekend.
Have a nice weekend.
Okay, see you tomorrow.
Thank you.
Thank you. Ako kakitu na sikuwa nimeweka ndani kwani kameanguka na kakote yake kanaka kila wakati na